Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf of Pacific Private Money. Don Fawn is off today, and Patty Cohen of Compass Realty. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate away during this show. And I'm guessing that within a month, they're going to be back open again, so you can save that certificate and use it then. And the certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is, again, random trivia. Patty, tell us what is going on in real estate.
Well, it's a better market than anybody predicted. And, no doubt the pandemic has wreaked havoc on the world. But at the same time, the real estate market is going to be that V shape is already happening.
Okay.
And I think there's 3 reasons for it. Number 1 is that interest rates are so low. We've got people reevaluating their spaces, their home. What do I need? I'm tired of this old house. And also, there's reduced spending. We're all home and we're not spending money. But also, simultaneously, what would have been the beginning of our peak market just came to a halt. So right now, we've got all those factors in play, and we have people that we're planning to do something. So instead of a March 15th beginning of the market, we have, May 1st. And on top of that, this is not an economic recession. It's a medical recession where it was chosen to halt the economy. So people still have money. And now, unfortunately, 40% of the hardship and the struggle is of people making less than $40,000 a year, but other people are still trading and doing what they're doing.
What I thought was really interesting was I read that one of the things that buyers of houses are looking for now are swimming pools.
Yes, that was the article that I was quoting.
Yeah, that's right. That's where I read it. Yeah. I'm thinking, okay, I guess a lot of people are kind of assuming, hey, we're not going to be able to do things out in the marketplace, like go to recreation swimming places and that sort of thing. And so they're trying to figure out what they can do at home, like with the home office.
Yeah.
And swimming pools and that sort of thing. Is that basically what it's coming to?
Yeah. And they want specific things. For a while, people were covering up their pools. I got a lot of calls from people. I sold my house 15 years ago. How do I cover up my pool? But now they want pools. They also want touchless entries. They want little quiet cloistered areas in the house where they can talk and be with, it's hard to be with a lot of people.
It's interesting, Patty, in that, the local papers, the headlines is basically, pace of existing home sales down nearly 30% nationwide. So, they don't really talk about, and again, that's the headline. So you have to kind of read into the article to get that, that doesn't mean prices have gone down. It doesn't mean interest in buying homes have gone down. In fact, if anything, interest in single family homes has gone up, because here's an industry report that you won't see in the newspapers that basically says, according to Redfin, which tracks all this stuff, there are saved searches that filter exclusively for single family homes are up almost 40% year over year. So
exactly,
there's a huge change now where a year ago we were all downsizing and people were maybe moving into the cities instead of out of the cities.
That's right, Mark. Part of that is the exodus from San Francisco. Yeah. So all the other 8 counties are feeling it, and it's crazy. It's an 11-year low in interest rates. It's an in inventory, 11-year low.
Yeah.
But have you seen? I'm not sure how much you're tracking San Francisco, but have San Francisco prices dropped a lot?
I'm not sure.
Okay.
I don't know.
I haven't seen any news that.
Well, what's happening in San Francisco, which is interesting, is that it's the only city in California where listings are significantly up year over year. Like the listed inventory levels are up 60% on a year over year basis. In San Francisco, they're down almost 20% nationwide. So,
so the listings or the sales? Just listings.
People are looking to move out of San Francisco.
Exactly.
And now,
in
of that
theory, that would make the prices go down.
Yeah, we don't.
Yeah.
Of that 60% increase, we don't know how many of those are looking to move out of state or out of the Bay Area. I would bet that a lot of those people are looking to move into the suburbs.
They are.
More space.
They are. Yeah, we're seeing a lot of that. Yeah. I mean, and so we have the mortgage applications nationwide rose to the highest level in 8 years.
Mhm.
And we have inventory like the lowest ever. I shouldn't have said 11 years. That was the mortgage applications. But so all of these things are coming together. But what remains to be seen is what about after this? And a lot of times you can predict basically on supply and demand. But with this virus and what's been happening this week across the country, it's on. Things.
And I just don't see interest rates going up for quite a while.
Right.
They don't want to scare the economy. I mean, it's already been kind of tethered right now. They don't want to do anything to make it worse.
Well, I know we've talked about this before, but the predictions are that mortgage rates may actually be less next year than they are today. So
Makes
again,
sense.
a lot can happen between now and then, but the trend is downward. And so even though short-term and long-term rates aren't necessarily related or connected, the Fed has basically said they're not going to raise short-term rates for the next year at least, and maybe not into 2022. So really, it bodes well for mortgage rates, which tells me that we could have a really, really strong spring selling market next year with low rates, high demand, and constrained inventory.
And more certainty.
Yeah.
Certainty with consumers and certainty with lenders.
All right, we're going to cut to our first commercial break. Here's our first trivia question. Random trivia is the theme. Whose picture is on the U.S. Purple Heart medal? Whose inscription? Whose likeness? I guess is really a better picture. Whose likeness is on
Trump?
the U.S. Basically, the Purple Heart, right? When you get a Purple Heart, whose likeness is on it? Call 888-912-1190. The first caller with the correct answer is going to win a tanning certificate. Stay with us. You are listening to The Best of Investing. We are going to be right back. Welcome back to The Best of Investing. Edward Brown here along with Mark Hanf of Pacific Private Money and Patty Cohen of Compass Realty. First trivia question. Whose picture or likeness, I guess is really better, is on the U.S. Purple Heart?
Trump.
Andrew Jackson. Taft.
Taft, yeah. You always vote for Taft. I remember. No, it's George Washington. So you get a Purple Heart. It's George Washington. That's why I had to correct and say whose likeness, because picture he was born before the camera. So it's whose likeness. Okay.
Likeness.
Yeah. Let's see. The other ones are probably a little easier. Patty, an email comes in from a listener that says, "How come prices don't seem to be coming down even with the virus upon us?"
Well, again, it's supply and demand. So we have an unprecedented lack of inventory. And I feel like a broken record because it's been like that since 2013, but now it is an all-time low. And we're in the middle of the spring market. So I think the real estate aspect, the real estate segment is going to lead the economy back. So that's really why. I mean, people want to buy houses. They still do.
Yeah, and the inventory is still pretty low, and we're not having a mass exodus from California.
Not
the
yet.
market here in California. How do people get a hold of you if they have real estate questions?
Oh, that's a good question. Thank you. I'm at 415-722-4842, and I'm Patty Cohen at Compass. And I can also be reached at Patty, P-A-T-T-I, .Cohen, C-O-H-N, at compass.com.
And it's interesting because of all the realtors, you seem to be quoted the most in the local paper and even around.
I'm trying.
Yeah.
Yeah.
Well, you've been around for enough time to have enough experience. So, Mark, let's move on to you because we have an email that comes in that says, I'm going to say the words "I'm sorry," but the person didn't say here, but I'm going to add, "I'm sorry, I missed your last webinar. How can I obtain a copy of it?" So why don't you explain what happened during that webinar?
Oh, so this past week we did our first webinar in a couple of months. We did one in early COVID around April, middle of April. And then last week, towards the end of June here, we did another update. And the webinar, the focus of the webinar was to talk about our investment products, basically. So we've launched a couple of new funds, believe it or not, this year, which might surprise some people because, you know, not a lot of businesses are expanding or growing or investing in themselves right now. In fact, so many businesses are in kind of a, you know, going into turtle mode, you know, just, you know, let's see where we can cut expenses, defer employees, brace for decreased demand. I will say at Pacific Private Money, our year-over-year loan volume, the loan units and the total loan volume, it is down for the first time in our 12-year history. We've had consistent year-over-year growth every year, and this is the first year that it's down thanks to COVID. But notwithstanding that, because we're in the alternative lending market, we've still invested in the growth of our company because we will come out of it. We're already starting to come out of it, and our loan demand is still there, you know, notwithstanding the fact that there's fewer transactions happening in Northern California, which is our primary market. We're still getting more than our fair share of transactions, and we use private capital to do those loans. And we have a fund, a legacy fund, as we call it, that's been around since 2013. It's called the Pacific Private Money Fund. And we've got $62 million worth of investor capital in that. But meanwhile, this year, and this is something we've been working on for over a year, we launched a new fund called the North Star Capital Fund to focus on the ever-growing demand for construction financing, which I will tell you, the banks are just not serving that. In fact, you know, almost no banks have been making any construction loans for the last 4 months because of COVID. They're busy doing SBA loans and PPP loans and EIDL loans and all that other stuff. They're not making construction loans. How do I know that? Because some of my best contractor clients who should be getting construction loans from banks can't. So we launched that fund. We think it's very, very timely. And then we've got a third fund that we launched recently, which is an interesting vehicle that allows our high net worth clients who have capital but don't want to commit to a fund, which typically has a 1-year lockup. We have a special fund that's really like a money market account. It has no lockup period. You could park money in there for any amount of time you want, and we'll pay you 7% for the use of that capital. And that one, that has a higher minimum. We're looking for $250,000 and above, and you need to be an accredited investor to take advantage of that. But we call that our Freedom Fund, the Pacific Freedom Fund, because you're free to put money in and take money out. And it's a very liquid fund. We use that like a warehouse line of credit where we close loans and then sell them within 30 days. And so we talked about these 3 ways to invest with Pacific Private Money at our fund event this past week. It ran a little bit more than an hour. And you could go to our website and or really actually just send us an email. Just send us an email to info@pacificprivatemoney.com, info@pacificprivatemoney.com, and request a copy or a link to the webinar, and you can go listen to it. You could also download our slide deck. We've got a person, Kimberly, who runs all of our marketing and promotion and website and email distributions, and she's great at responding to anybody that wants information. In fact, we sent an email out to right the day after the show. We had about 100 people sign up, and less than half of that actually tuned in. So we knew that a lot of people signed up because they could always get a link to watch it again later. And that's the beauty of Zoom meetings these days, right? Everyone gets recorded, and you can watch it at your leisure and fast forward through the boring parts. Of course, there were no boring parts in ours. It was riveting.
Yeah, it's funny. After this COVID thing, you're thinking, okay, who's doing well? Netflix, Zoom.
Yeah.
You know, right? A few of these companies, they're not getting hit by.
Well, interesting. You know, the alternative lending space has been pretty busy. Now, some of those loans have been in trouble, like the so-called non-QM loans, the ones that are not, you know, bank financing, the loans that self-employed people need to generally go to those froze up, and they're starting to slowly come back. But the bridge loans, the transitional bridge loans that we specialize in at Pacific to help people buy buy property quickly, fund quickly, special situations like that where they need to rent capital for short periods of time. We've never closed, so our staff has been on. We didn't furlough anybody. They've been working from home, but at Pacific Private Money, we've been open for business. So if you're a realtor or mortgage broker out there and you're looking for Plan B options for your clients to help them close on an acquisition when your conventional source is not going to be able to close in time, go to pacificprivatemoney.com, pacificprivatemoney.com for more information.
All right. Thank you very much. Going to cut to our second commercial break. I know it's not Christmas. We're about, halfway to Christmas. But in the song, the 12 Days of Christmas, what did my true love send to me on the fourth day? So, Mark, you're going to have to start singing the song to get.
Yeah, you got to sing it.
On the first day.
And if you can't finish it, you're going to get an earworm.
Yeah, that's right. Call 888-912-1190. The first caller with correct answer is going to win a tanning certificate, which is worth over $100. Again, the trivia question is, in the 12 days of Christmas, what did my true love send to me on the fourth day? All right, stay with us. You are listening to The Best of Investing. Don't touch that dial. We are going to be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money and Patty Cohen of Compass Realty. And our second trivia question was a Christmas question. In the 12 Days of Christmas song, what did my true love send to me on the fourth day?
Bunch of calling birds.
A bunch of calling birds.
Calling birds, yeah.
Whatever those are.
I know. Yeah. What are calling?
I guess loud, squawky birds.
Oh yeah, she not my true love anymore. I'll tell you that.
That's right.
Squawking birds.
They're going to the bathroom everywhere.
Pigeons.
Pigeons. That's right. 4 calling pigeons who had a lot to eat the night before. So Patty, you have an article you wanted to share with us.
Yeah, so more than ever, it's been hard to predict where prices are going to go, what's going to happen. No one knows, or maybe they do know what's going to happen with that COVID curve because it is going up. But so it's impossible to really predict. But we have a sense from the big players what they're saying is going to happen in the next, forecasting home prices in the next year. For example, CoreLogic, very respected,
Yep.
A decline of 1.5%. Haus, H-A-U-S, decline of 1%. Zillow, up 0.7. Home price, Fannie Mae is up 0.4. Freddie Mac, increase of 2.3%.
They went out on a limb on that one. The other guys are just going, well, we can, if we think it's going to go down, but it's only going to go down 0.5 when you're talking less than 2%, that's a blip in the radar.
Yeah,
It's a blip. It's a rounding error. Yeah. And then, for example, like Zelman and Associates, 3%. Guess what the realtors are saying? Guess what the mortgage bankers?
I would bet they think it's going to go up.
Yeah, mortgage bankers and the National Association of Realtors, 3.8%. What a surprise. Those are the highest numbers of all of them. But the bottom line,
on real estate.
Time to buy today.
yeah. And the two most important things we can cull from all of that is that there is no real consensus, but at the same time there kind of is, like Mark says, that's kind of a rounding error. But we can also say no one is talking about prices crashing like they did in 2008.
Yeah, and it's nowhere in any market in the U.S., which was interesting because a lot of markets in the U.S., particularly California, saw a pretty major drop in home values post 2008. And it's interesting because, again, we're lenders, we're private lenders, we use private capital, and even though we loan from our funds, we also make loans available to our individual note investors who like to invest in California trust deeds. And what was interesting is I talked with a lot of our high net worth, experienced, longtime note investors back in March and April. And many of them were holding off or saying no to some of the really good loan funding opportunities I thought that we were offering, saying, oh no, that valuation they have, that appraisal that that person has from February is no good. Take 30% off of that. And I knew that there was no way that was going to happen. The metrics don't support it. The problem is I'm offering an investment opportunity. They basically, you either believe that it has value or not. So we're not pushy when it comes to that. And so I usually don't chide my investors and say, oh, you're full of it. But it's interesting that I took that to note how many people and thought that the market was going to drop 20 to 30%. Now, some of them may have just been more opportunistic in nature, thinking, I hope it drops 30% because I have capital at the ready so that I can go take advantage of some buying opportunities. And again, think of those poor people who paid thousands of dollars to attend real estate boot camps in the last few months, and a lot of them sprung up on how to take advantage of the next buyer's market. Well, there is no next buyer's market. I'm sorry, there just isn't. There'll be some distressed opportunities from people who have to sell, but I think the market's going to protect those people. I think, even notwithstanding then maybe a notice of default or some other form of distress on the real estate in terms of, being able to maximize the sale price. I don't see any support for any predictions in any market, particularly in California, where real estate values would go down maybe more than, a 5% drop. It wouldn't surprise me. In fact, with San Francisco having a 60% year-over-year increase in listings, to the extent that some of those might be condos or other homes, maybe they don't get multiple offers. Yet, I'm hearing from our real estate agents that we work with in the city that homes are still selling for 20 to 30% over asking price. They're still playing that game where they list low and create some excitement. That's still happening. There's still multiple offers and bidding wars for homes in certain neighborhoods of San Francisco. So
that's the city, San Francisco agents, that's their
MO.
I wonder who started that.
And they go down like maybe 30% down. And the market takes it where it goes. Now, if you go 30% down in the rent, I don't, maybe it'll happen, who knows? But anyway, that's their MO.
Now, rent has gone down in the city. That I found very interesting, that rentals are down. I think the number is 10%. It was actually
dollars.
Renters. So rental rates have declined in the city. And again, I think I think people are moving out. There's less demand. The whole COVID thing of being shelter in place in the city. I think there's a lot of demand for trying to get out into the suburbs, or maybe some of those renters are actually moving out of the Bay Area if they're taking advantage of the opportunity to go out, go out to Texas or Arizona where things are a little bit less severe.
Yeah.
But, other than rents, we're just not seeing a lot of change in real estate. Unless you're a commercial investor, if you invest in commercial real estate and you have retail exposure, or you invest in REITs. A lot of REITs are taking a heavy hit right now because of the lack of rent payments coming in. Retail spaces, a lot of the owners of those properties are wondering if their tenants are going to come back in. So there are segments of the real estate industry that are being impacted harder than others, and commercial would be included in that, but not residential housing. Residential housing is still strong.
Yeah, I mean, when I talk about real estate, I'm generally talking about residential, but retail is a mess, but retail always was. It was already going that way. And then commercial, same, a lot of people are changing how they live their life. This work from home is pretty good. The companies say we can do this.
But eventually I think what's going to happen is the companies are going to realize they're not going to be productive. You can only stay in your pajamas for so long doing work. Hey, we're gonna cut to our next commercial break here. What color flag is waved to indicate caution in auto racing? So we have an auto racing question. All right. 888-912-1190. First caller with the correct answer is going to win the tanning certificate. Stay with us. The Best of Investing is going to be right back. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hanf and Patty Cohen. Let's see. Next trivia question was, what color flag is waved to indicate caution In auto racing,
I know that.
what's that?
Yellow.
Yellow. That is correct.
The
Okay,
yellow flag.
a yellow flag. So Mark, give us an update on the fund. Basically, what kind of loans you do, what kind of rate of return you guys are distributing to the investors. How does it work?
Yeah, so those who had a chance to listen into our last webinar last week, the first part of the webinar, we kind of talked about, what's happening in the economy, some of which we've already touched on today, and how it impacts investments. And, certainly the stock market's been very interesting. It's, at an all-time high today, again. And that's perplexing to a lot of people. And there's a lot of smart money out there that believes that the market's overpriced right now and is due for another correction like we had at the beginning of COVID. Now, I have no idea whether that's going to happen or not. I'm not a big stock market investor. But rates have not gone up. Interest rates are still low. So what does that mean for savings, CDs, bonds? Those are all still relatively underperforming in terms of what kind of rate of return you're going to get. Those who invest in REITs, which is a real estate related investment product, but it's a very specific type of stock-like investment that is subject to market swings where you can lose principal. It's not the same thing as investing, say, in a note or a mortgage pool fund where the asset valuation is fairly steady. So, at Pacific Private Money, we serve two client bases. One is we make real estate secured loans to borrowers who have a relatively short-term need for capital. And that capital we get from private individuals who either invest in one of our funds or whom make their capital available to us to actually fund those notes directly, which is also referred to as trust deed investing. So trust deed investors and note investors work with us, as well as more passive investors who just are really attracted to a 7, 8, or 9% return and are thinking to themselves, well, I can't get that kind of rate anywhere. And yeah, if I'm in the stock market, if I buy low and sell high, I can create those yields. But you know what? I like to spend my time doing other things. I'd rather put my money in an investment that has a track record of paying rates in the high 7s, low 8s, and higher, and then just not worry about having to manage that investment. So I won't say it's an invest and forget strategy because you never really want to be caught doing that, but it's an invest strategy in mortgage debt, California mortgage debt, that we believe has proved its resilience for many, many years. Now, we started Pacific Private Money in 2008, in the summer of 2008, when the financial meltdown hadn't actually happened yet. We were in the beginning of the recession. We knew real estate prices were heading in the opposite direction that they had been for the years prior, but we hadn't yet had the whole mortgage meltdown like we did in October. And so we were lending before and through that entire economic calamity, and yet all of the loans that we put our investors in, there was never a single dollar loss of principal. So we were lending in 2008, 2009, and 2010. And during that entire 3-year period, real estate prices were continuing to trend downward, yet we didn't lose any money for our investors. Now, some did end up foreclosing, and they made a nice, tidy little profit. So it wasn't like borrowers didn't struggle. Borrowers did struggle. It was a tough time to be borrowing, buying, fixing, and flipping real estate because, until about 2011, 2012, that's when the writing was on the wall that we had kind of hit bottom, and that was when the biggest opportunities and the best opportunities to buy, fix, and flip real estate really started to happen back then. And we were funding during that entire period. Now, after a while, after a couple of years, they passed Dodd-Frank. They put a lot of lending restrictions in place. And now all of a sudden, we're doing fewer loans to flippers and more loans to consumers who are looking for an alternative to banks to buy their homes. And so today, in 2020 at Pacific Private Money, we actually don't fund that many fix and flips, and we don't do very many seconds. What we do is a lot of first position purchase money loans to people who want to buy either a home they want to move into for themselves, or they're buying investment property and they want reliable, sure thing, absolutely, positively got to close by a certain date. Sometimes it's within a week or two. Sometimes they have the luxury of 30 days, but they just know that maybe because they're self-employed or they got a glitch in their credit or any number of reasons why they just can't rely on conventional financing to get it done. So they rely on Pacific Private Money to help them capture the property, meaning we help them close. Because the most important thing when you're investing or purchasing real estate, the most important thing is to actually purchase it. Most important thing is to close. Yeah. And so certainty of close is something that we specialize in. And generally people use our money, they rent our money for short periods of time to close on property. Then when they, once they own the property, they have all the time they need to qualify for bank financing. And so for that, we are able to produce yields. Our legacy fund, the Pacific Private Money Fund, is paying about 7 3/4 right now. We just launched the North Star Fund, which is projected to pay between 8 to 10%. And we've got our Freedom Fund, which is, again, a very, very short-term fund where we use that just to close loans that we're going to sell off the books right away. And we pay a flat 7% for that. And so 3 ways to invest. They are all, in our opinion, you'd be hard pressed to find better secured opportunities to earn that kind of yield on your investment capital. And again, we're not suggesting that anybody put all their money into vehicles like those that we offer, but you really, I mean, it's a great way to boost the yield on your portfolio by taking a portion of that and investing it into a California mortgage secured pool or fund. And we do a lot of presentations, we have a lot of information. So if you want to learn more about this, and you owe it to yourself to learn more about mortgage investing with a California-based company. I've been in real estate since 1982. In fact, I've been in real estate my whole life. I worked for my father's construction company every summer from 13 on. I've never had a job that wasn't involved in one form or fashion in real estate. And in 2007, I discovered private lending, and in 2008, launched Pacific Private Money. And so, and I'm a lifelong Bay Area resident. I know real estate in Northern California very, very well, and our clients are extremely happy. So a lot of references too, if you're skeptical. So again, for more information, go to pacificprivatemoney.com. Our website is, we're always adding more information onto our website. You can listen to past radio shows. You can listen to little video clips where we talk about a number of topics. Go to pacificprivatemoney.com.
Very good. All right. And I would think with this COVID virus that you're probably getting a lot of more leads because the banks are pulling back. All right. Stay with us. The Best of Investing will be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money. Nam Phan was off today, and Patty Cohen of Compass Realty. We didn't have a trivia question, but Patty, I want to ask you about Compass because they seem to be taking the market to storm.
Yeah, they are very, very well funded. And in a few years ago, they made a declaration, which was kind of just throwing numbers out. By 2020, we want to be the top 20% of markets. We want to be the #1 broker. And it was so absurd when they said that. And now it is there and then some. So in terms of the Bay Area, we dominate the Bay Area. So for Marin County, it was Pacific Union, which was more kind of seasoned, elite, experienced agents with a higher price point. Okay. So and I was in the Pacific Union, and we didn't really embrace Compass. It felt kind of low end a little bit, but it is absolutely not. It's very, very good tools, very, very good networking, very good.
Well, that's the thing is if you're a seller, you want to go with somebody who is with a big company, I would think, because you
Yeah.
have the exposure.
You want that exposure, you want the networking, you want the marketing. And what's really, though, important, if you had to choose between those things and an agent who knows what they're doing, you take an agent that knows what they're doing. But if you can get it all, it's good.
Yeah.
And so in South Bay, it was Alon Pinnell. In the city, it was Paragon. So we have Compass owns the Bay Area. Same with New York. All the top 20 markets is number one.
Wow,
Now,
it's amazing how they were able to do that.
How is the Compass Buy Before Sell program going these days? I know there's been a lot of promotion about the Buy Before Sell. Is that
what's Buy Before Sell?
No, Compass Buy Before Sell program, where you help homeowners to their next home, buy their next home without having
do you mean,
sell
well,
first?
so we have bridge loans, we have concierge, and we have coming soon.
That's it, the Compass Concierge. That's
Concierge. Well,
yeah.
Pulled back a little bit right away, like the first couple days of COVID, just pulled back and shrunk the numbers. But now it's back. It's back. I think the average amount in the Bay Area was $60,000 that people spent.
Wow.
Yeah. And I mean, I know people that's in the really high end that will spend like $200,000-300,000 just getting their house ready.
Mhm.
But anyway, but now we have pulled back. It wasn't the same limit in the rest of the country, but the limits have gone down, but people are still doing it. Yeah.
Yeah, the concierge program is nice. It's nice to know that you guys can also, can help them, clean up, freshen up their home, stage it, get a higher price for it. Those are really valuable services that the smaller boutique companies really can't compete with. So
exactly. So
reason.
it's basically we do the work, pay it out, and it comes out of escrow. And hope it works, because there's not a lot of teeth if it doesn't.
Yeah, that's a really good program for the homeowner. Very, very
it really
good program.
is. Yeah.
And it'll help transactions transact, as they say. So
Yes.
Patty, why don't you give out your information one more time?
Yeah, so I'm with Compass. I'm based in Marin County, and I am at 415-722-4842, and it's Patty Cohn. I can be reached at patty.cohn@compass.com. That's PATTI.COHN at Compass.
And Mark, if people either need a quick loan or want to invest with you, how do they get a hold of you?
Easiest way is our website, pacificprivatemoney.com. That's pacificprivatemoney.com. Lots of good information on that website.
All right, we're going to cut out. Here's our thoughts for the day. So I said to my gym teacher, can you teach me to do the splits? And he said, well, how flexible are you? I said, nah, I can't make Tuesdays. And a good way to stand out from the competition at a job interview is to bring your resume on a floppy disk. Stand out, right?
Yeah.
All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
That's right.